Hi guys, welcome back to another episode where Mike and I go over you guys' topics, comments, and questions. I just wanted to say again, thank you for all of the comments. We really appreciate it. Really appreciate the support on the channel. If you guys haven't already, make sure you guys like and subscribe. All comments help the algorithm. And with that, we'll get into today's topic, which is two comments. One of them is, hi Mike, you've spoken earlier about system trading a back-tested set of rules and about doing research in the evenings, which is fundamental, I assume. How do the two work together?
I don't have any damn clue, actually. No, I don't think they work together. I think you answered your own question. The viewer did. System design and back testing really is a self-contained unit, right? You have historical data, and some kind of trading engine that can emulate the trading rules, and then spit out a bunch of outcome. For those of you that aren't aware of it. The commercially available ones they're not expensive, but they're also not cheap. I would say that they're largely prosumer style pricing. The key is you also have to get the data. Some popular ones are like Mechanica. Trading Blocks is good. They allow you to test at the portfolio level, not one instrument at a time, which to me is kind of flaccid anyway. I think TrendSpider. I don't have any financial relationship with any of these companies, so I can speak objectively. I know someone told me TrendSpider can allow you to do some basic back testing too, but they only go back 2 years. And in my humble opinion, that's not enough. You want a minimum of 10. And again, you want to try to test at the portfolio level because you're probably not having just one idea on at a time. And if you are, we have philosophical differences about, trading. I don't find that I never would have had the success that I would have had if I just tried to focus on one thing. But, figure out what's best for you. So system trading is one by which you're going to select your trading rules ahead of time. They'll be robust. You'll fit them over many, many instruments. A whole swath of stocks perhaps, or maybe as many as, who knows what, 12 to 60 different commodities. But in order to do that, you need to get the data, and there's usually some kind of licensing or subscription fee to that data. Again, the price points are what they are. It's probably a couple $100 a month for data. So you have to have strong conviction and be very, very serious about what it is that you want to do. I think you get what you pay for. The corollary to that is, trying to be a chart reader because it's cheap and it's free, right? You can use end-of-the-day data and still be a chart reader. And so that's a little bit more, you have to go fly by the seat of your pants. I think most of the folks who try to do that do it incorrectly because they're trying to find, 45 different trading patterns on top of one instrument, which is terribly frustrating and inefficient. But people don't listen. And I only say that because I get the emails from the people who failed. The winners are out winning. The majority of the people fail, and they get frustrated because they were sold a line of crap, and they couldn't, get it to work. If you're back testing on the system stuff, like again, you've picked one set of rules that you're going to apply across every instrument, so the rules are set to be robust. Then you look at the output. The output will tell you what's the frequency of winning. Obviously, you can get the complement of that. It'll tell you, your average win, your average loss, your max gain, your max loss. It'll therefore give you expected value of a trade. And then some of them can give you like Sortino rate, Sharpe ratio, Sortinos, if that matters to you. And also it can give you, and this is important, what is your max drawdown and how long did it last? In fact, you can see every drawdown because it'll show you your equity curve. And that'll give you an idea of how the rules did and if you could kind of live with those results. Of course, what is past is prologue, but on the other hand, things very rarely repeat themselves the same way. But it gives you an idea, like if the rules would have been profitable in my experience. Rules that you follow like that don't turn on a dime and all of a sudden work for 20 years and then it doesn't work anymore. They kind of need to be adjusted and adapted. Most system traders have to tweak just to, if nothing else, always try to improve. So whereas, doing your research at night without an emulator, right, or a trading engine, you're really looking at scanning however many charts that you want to trade. I would tend to be more promiscuous if I were you and look across daily and weekly data, not intraday. And if you can't see it on the daily or weekly, then there's no trade. Move on to the next instrument. And then this way you're going to apply your best setup, and you'll be able to apply your best setup to a trade, and you'll be able to also affect that across any number of instruments so that you're not pushing, right? Because sometimes you tend to push or you chase, and that's not a strong spot to trade from. Most of us who have made it are in the mindset of, if you don't have a trading edge, you shouldn't be in the particular trade. You have to sit and wait. So it becomes kind of hard if you're sitting around just looking at stock index futures and you're looking to try to find something that's statistically significant on intraday data. It's very difficult to do. Some people can do it. Most people can't. I like higher time frames because the data are more statistically significant, and lots of good things happen at multi-period highs, not intraday highs. But some folks like the video game aspect of it, and so that's where their head's at. That's what they do. The goal is to find which really resonates with you. As I've mentioned before, if you look at the gains on a lot of the stocks and the indices, it really comes from holding the positions overnight. Folks don't believe it, and they want to try to make things harder for themselves because they're rigid in their thinking, and their belief system has been infiltrated by folks who they really don't, because it's really two different mindsets, two different approaches to trading. Usually you would wait for the close, and when things are all settled, 4 o'clock Eastern time, not counting the aftermarket, and you'd go through your charts, however many names that you were following. It's harder to do it that way because there's a whole universe of things that you can't see. So how do you find names? How do they find their way onto your wish list or watch list? There has to be a catalyst in the world somewhere. Does it have to show up on Twitter or StockTwits, right? If you're looking at all of the New York Stock Exchange listed securities, when you get that data feed, all the data is going to be there, right? So you could take out the preferred stocks, you could take out rights and warrants, and just leave yourself with, a list of traded equities. So inside of that too, I should say, there's a whole way to kind of rake through the data before you even put it through the simulator so that you can eliminate things that you would never trade in. So like I said, New York Stock Exchange data, if you get the whole jammy, it's going to include preferreds, rights, and warrants. It'll include fallen angels, and it'll include Berkshire Hathaway, right? So you might say for your budget, since you might not be using day trading buying power, you might use just cash or Reg T. You have to figure out what is the price of the security that you can afford to buy, a position of. How do you do your position sizing? So these software programs will allow you to screen that data and eliminate certain things by your setting parameters, checking and unchecking boxes, eliminating preferreds. You could also say, I don't want to trade anything under $20 a share. So this way, any penny stock or any fallen angel won't show up on your list. You can also say, for the amount of money that I have, it's not practical to think of buying something that's, say, over $80 a share. And so if you do that, you're going to knock out a lot of bigger names like your app, even though they're not New York Stock Exchange listed stocks. You could do the same with NASDAQ, but you're going to knock out your NVIDIAs and your Apples and your Amazons, right? Because they're over $100 a share. So this way, though, at least you can cull the list into something that's much more manageable. Then when you run it through the simulator, there's no chance that you're going to miss a trade because the simulator looks at all the data without any type of bias.
Sure.
So I found that to be very, very efficient earlier on in my career because it allowed me to research, so to speak, lots of data with the push of a button, and the data services that you can get will basically update their data, clean it up, edit the stuff. Should be done by 4, 5, 6 o'clock Eastern time every night so that you can run your simulations in the evening as well and then have an idea of what your orders will be for the next day and where you would adjust your protective stops. So that's a prosumer move that comes with software it's largely Windows-based software that you need to install on your machine. And so these aren't services that you would subscribe to per se. You can get the data services or subscription. I think the license for the simulators lasts for like a year or two, but you'll have to look those up, one by one. I found it very, very helpful to understand the nature of how trading works and how portfolios work, right? Early in my career, because I knew inherently that if you looked at even so they would talk at the time, the Dow Jones was the most quoted and reported stock index in the world. You'll find out that there's only 30 stocks in the Dow Jones Industrial Average. They're called components, right? So if you look at the stock index, if it was up, a couple hundred points over the course of the year, you could go inside the index and say, okay, which of those names actually mattered? Which of the ones were most responsible for the gain in the index? Because not everything goes up. Some go down, some are flat, some go up. And so you're looking at the net effect. You can do it, obviously, with any index. And so it occurred to me, if it was in the Dow Jones, it had to be a real blue chip name, high quality. There's certain financial standards that have to be met for a company to be listed in New York. And so I said, what if I was able to isolate, the 3, 4, 5 names that make the big difference? I could create my own little basket of those names and outperform the index because I wouldn't have all the other stuff that was flat, not trending, or going down. You see what I'm saying? And so when I looked at the simulator, it provided micro research on the trading model itself, but then also it allowed me to look into the guts of how names performed and how you could kind of create your own basket. At the time, I was clearing my equities through Goldman Sachs, and they had a function where I could create my own CSV file in like Excel or what have you, and put in the ticker and the quantity and the price where I wanted to get executed, and I could actually enter that in and trade my own basket with the click of a button. Basket on, like risk on, risk off, and move all the inventory at one time. So you could take advantage of momentum strategies that way, which is pretty, I don't want to say exciting because I don't trade for excitement, but it was a nice tool to have after having found out that, if you focus on the top 5 names, you could make, that's how you really double your money, is you focus on the names that are working, not becoming emotionally investing in, I have to make it trade in the E-mini every year.
Right.
Because that might not be where the action's at. So you force yourself to do more work, and you put yourself in a bad spot where you could be forcing trades. And I don't know anybody on planet Earth who has several decades of trading experience that made it by forcing. It doesn't work in trading, doesn't work in relationships. It just feels awkward. So that's why I tell people to be pluralistic, be a little promiscuous in their thought process, and let go of needing to make it with one particular instrument and think across the whole universe. Because the last thing you want to do is you got to feel like an idiot if you're sitting there trying to trade E-mini micros and NVIDIA's up 3-fold or, 5-fold on the year, and you're not participating in it. It's like, what are you doing this for?
Right.
Are you doing it to make money, or are you doing it to stay in your will?
Yeah. Yeah, no, it's a good point. I mean, I had a couple, follow-up questions. So if you were to define, what each type of research is for, so the back testing, through some simulator, would you say that's for developing your long-term protocols or confirming your long-term protocols and just how you would trade in general?
Well, it's certainly a good place to start. I don't know that I'd have to really think about whether they defined the protocols. I know you have to have a gut feel, and you have to have an idea of where to start.
Sure.
And just like Michelangelo was chopping David out of the marble, right? You have to start somewhere. And so that starts the thought process. Remember when we talked about goal setting, and you're setting a goal that you don't know how to hit, so you don't have to plan, right? You're not going to have the plan because you don't know what all the steps are. You don't know how many steps. You don't know which ones are going to take more effort and or more time, but you need to take a step in the direction of the goal. It's going to feel weird because you don't have a plan. There's a lot of uncertainty. Everything's, probabilistic. And that's how you work with the simulators. Okay, let me buy a 10-day breakout. Let me see what happens if I buy a retracement to the 20-period EMA and back test that. See which one feels better. Also look at the drawdown, because a lot of times these trading models they look good, they produce a lot of returns. Like the turtle rules were great, but they have massive drawdowns. It's hard to run public money with that, you know, because no matter what happens and what you think trading rules do for you as a trader, they don't remove your emotion, especially when the client's calling you when you're down 40%. So it depends on whose money it is and what your stomach lining is at. So you could have really big volatility. Now, look, you could go from 100% of your capital to 300% of your capital, then have a 40% drawdown. You're still making money. What's harder is when you're starting out and you don't have as much capital and you go into drawdown. You know, but those folks were trading, you know, 2% risk units, and they were trading up to 4 units in the direction of the trade. So when those markets stall or they have sharp reversals against you, you know, you're going to get smashed. You have to know how to exit. So we spent a lot of time looking at, you know, momentum-based models, breakout models, but then also know when the momentum is stalling to lighten your position, right? Because the job is to make money, not make money and then give it all back.
Sure.
But I think of all those things as really a starting point on how to backtest ideas to see which one you're most compatible with.
Sure.
As opposed to saying, I want to trade these rules, I'm going to go to the simulator, because to me that's no different than just saying I'm going to be an E-mini day trader.
Right.
Right? There's a whole world out there that you're missing out on that you can say, well, who the hell are you to tell me what to do? It's like, well, I'm not telling you what to do, but who the hell are you to tell me that you're not missing enormous amounts of opportunity by having your head up your ass focusing on one idea?
Right, right. So,
you know,
yeah, would you say, I guess a good comparison then might be like practice or like scrimmaging a little bit then, because you get to like, you know, have an idea and then just like kind of practice that and then work on it. Like, you know, we do that a lot. The only reason I'm trying to draw a comparison in general is like relating it to esports a little bit. So like at night, you know, you said it's kind of just like, you know, going over, you know, the trades that you have, you know, currently out there and maybe even, you know, looking for more if you could see any, if you find any others. That's kind of like similar to what I would do with VOD reviewing, right? Like late at night after practice is over. You know,
tell everyone what VOD is.
Yeah, so VOD is just like it's like video. It's
video
like
on demand.
Yeah, well, it's like a name for a video file.
Okay.
So we look over these, you know, video files for practice like pretty much every night, and sometimes even just like, you know, gameplay and your matchmaking or whatever, just to find like little mistakes and just to see like, you know, if what you're doing is working or if it's like supposed to be the correct play. Because like you know, you can speculate on everything with hindsight, like in this game in particular. Like you could just say like, oh well, I should have known this or I should have known that, you know. But it's super easy to say that after the fact. But while you're in it making these like really, really fast decisions, it's like super, super hard to like, you know, analyze everything correctly or, you know, correctly. So with the practicing, you know, with the simulation and stuff, to me that kind of feels like scrimmaging and practice a little bit, you know, finding, you know, what you like to do. Is this something I'm, you know, compatible with? And then, you know, just kind of working on it and just practicing it, making sure you're capable of understanding how to make that play, you know, all the time, you know, just like recognizing a pattern. And the nightly stuff kind of feels like VOD review to me a little bit. Yeah.
I mean, past performance is not indicative of future results, right? So you have to be careful, and you don't want to fall in love with your reflection, narcissist. So you could certainly go down that path. I think I was always objective to understand to say, okay, well, this was the past. But what it does is it forces objectivity, because, you know, there are some things that happen in real life that people can't anticipate because they don't think to ask the question because they don't have the experience, especially in the new trader world. So the simulator answers the question, when I've taken 5 losses in a row and I have to put on that sixth trade, but I've lost my confidence, here's what the results would look like if I took that 6th trade or whatever the end trade was after a string of losses. Because even if you have 50-50 odds, you can calculate over hundreds or thousands of trades what the probability is of your having 8 losers in a row, for example. You know what I'm saying?
Sure.
And, you know, you can use a little Bayesian statistics in there too. Like if you have a certain winning or losing streak, what's the probability of it, you know, to continue given past performance? It's not written in stone, but it gives you an idea. So the idea helps you both financially, because it can tell you how to add or remove risk when you get to that point, right? Like if you have a winner on and you're fully loaded and you're up 10R, what's the probability that it's going to go to 12R or it's going to go back down to 5R? So you know how to fish or cut bait, cut your risk, add your risk, right? That's important for position sizing. And I've always said we make and lose money by our position size, not our sniper entries, right? That's bullshit, right? If you're trading for 2 points on the E-mini, yeah, okay, knock yourself out. But I'm not getting out of bed for that. I'm not even going to, that's not something that would excite me.
Right.
Because that's working class thinking. Just it is. You know, you can make of it what you want, but I'm not gonna. I don't want to work for $15 an hour, and it makes no sense for me to do that kind of stuff manually when I could program a computer to do high frequency trading to kind of scalp those positions. I don't want to be sitting there grunting it out, thinking like I'm a winner. That's losing behavior for me. So the simulation, the one thing that you're missing though is that it's not with real money, so you don't feel the burn. You know, there's something that happens when you commit real capital to a trade is it excites your emotional system. Yeah. Doesn't matter whether you're a system trader or whether you're a discretionary chart reader. You become emotionally invested in the outcome of the process that you're in, not necessarily the outcome of one particular trade. You know, if you're day trading, you probably are because you're only invested in trading that one instrument, and so the outcome can have a big impact on you. If you want to have a green day, you know, which, you know, to me is not real. It's not the way I would approach things at all. I would sit back and try to make more money and not necessarily worry about making small bits of capital every day. I would try to make bigger amounts of capital over the course of a week or even a month, even if that meant having red days or several red days in a row. But that's my emotional makeup. There's some people who can't take the losses. It's too much of a blow to their ego, and they interpret losses as, you know, financial ruin. Which is unfortunate, right? Because it all comes from school. The schools teach you to think like if you get 70%, you're a loser. If you get 90%, you're a winner. So the closer you get to 100%, the more perfect you are. And trading isn't about perfection. It's about getting kind of close. It's about rounding the edges. Yeah. You know? So you got to give yourself some room emotionally as well as financially. It's harder, I admit, for newer traders who also have small accounts, because they just don't have the give in their accounts. And then it puts their whole franchise at risk because if they're in a drawdown and they're losing money, they're thinking about, what if I lose all my money? And that's why I can't take risk home overnight. So they start all these bad habits and then they start to compound. So I think the back testing is important. It can help you do better research because it gives you more creative ideas when you could look at the results of the back test. Because it's really objective. It doesn't take into account I broke up with my girlfriend, I lost my job, my mother and father were in the hospital, or whatever, or I didn't feel like trading this day, or I got hungover and I missed a trade the next morning. All of that stuff doesn't exist. It might exist in the real world, but if you're running through a simulator, it says, here are the rules, and you follow them in a black and white manner so that you get, you know, as objective the results that you could possibly get. Someone's going to ask, so I'll answer the question now. I never spliced contracts. In futures, people want to have like a continuous contract, but I never did that because I felt like it didn't exist in nature, and each futures contract has its own supply and demand because of seasonality. And so I never spliced any contracts ever. If I was trading sugar, you know, I went from whatever, July to October, and then October to March of the next year, and that's what I did. I didn't splice them together, because I couldn't also guarantee that I could get those prices, right? If I was going to financially engineer these things to make continuous contracts, I didn't do that. So I had to program in what we call the roll, which was just my style. You can do it the way you want it, or the way you think is best. I'm just trying to think if there's any other questions. Yeah.
Cool. Yeah, no, I think I like the point you made about, you know, the rounding out the edges, you know, kind of thing with trading. I think that's a really good lesson for people to kind of take home, I guess. It's not about hitting the 90% or anything like that. It's kind of attempting perfection and not, you know, feeling like a loser if you don't necessarily hit that mark, you know, at the 90% or the 100%. Obviously, the more the better, right? But, you know.
Sort of. I mean, the question is, would you rather make, you know, 10% a month, you know, day trading the E-mini, or would you rather trade, you know, smaller positions of 5 different instruments, take the risk home overnight and do 15, 20%, right? Because people want to have their emotional needs met. And so there's a lot of folks who would take the worse off scenario because it feels better.
Right.
Right? So the simulation can kind of show you what that looks like what would be the worst case. Because people tend to amplify and make a big federal case out of stuff when it's not that big of a deal. And you're talking to a guy who's been in futures positions that I was locked in because the limit moves, right? So there was nothing that I could do to play defense. I couldn't get out of the losing positions, and that went on for a couple of days in a row. And so, you know, you survive them. There's nothing you could do about it, but that's not a reason. Like I was long live cattle when Mad Cow hit the tape, for example, and I wrote about it in the book, and it was locked limit, you know, offer limit down several days in a row, like maybe 7 days in a row. I can't remember, but it was enough to made it into the book. And, you know, your position size to take that into consideration. But even having, and that wasn't the only time, it was a memorable one, and I wrote about it. But the point is, it's not enough to psych you out of trading futures, right? If you do, I mean, how many tens of thousands of trades have I done, right? So there's going to be outliers like that that'll happen. Then there's also ones where they're bid limit up when you're long, and you're just printing money for doing nothing, and so it goes that way. So I wanted to see the reality. Like, what did it look like if I looked at all the history that I knew, but also all the history that I couldn't remember, because it shows up in the data.
Sure.
And so that's very powerful, and it's very beneficial because people tend to focus on the near term and the most recent history. I'm not saying it's all recency bias, but it is. They tend to amplify what's happening in the here and now, and they don't have a really good, very, very rarely do I come across someone who has a really strong sense of history from a trading standpoint. And that ignorance is a gaping hole in their fundamental understanding of how markets work.
Yeah.
Right? So what was the we had another question that was pretty good.
We did, yeah. We can segue into that. This one is from another comment, and it says, can you elaborate on why we should move away from trading futures if we are still not consistent? I've been trading one contract on micro ES for a year now and still not consistent.
So to me, this is a human issue because the instrument is what it is, right? It's if you're not consistent, it's likely because of your behavior. So then the question is, what is it? I don't know enough information here. What is it that the person's doing, you know, in their trading, and what kind of trades are they trying to affect? Again, we have intraday versus longer term, what I would call smarter trading, and letting the market forces work for you, as opposed to having to reinvent yourself every morning. I don't want to have to work that hard if I'm already in a winning trade. Are you taking your, right? Some of the typical things are they take their winners too soon, and they're reluctant to offset their losers. So there's a mental issue, right? Because it's an easy fix from a tactical standpoint. You just put in your protective stops and you leave them. But a lot of folks can't tolerate losing money, so they stay in there. The micro is so tiny, it doesn't really make you or lose you a lot of money, so you're kind of safe with it either way. And so I would say, well, experiment with some new stuff. If you're trading, you know, a micro contract, you know, try, if you're looking at breakouts, try moving average kind of stuff. If that doesn't work, try waiting for pullbacks in uptrends, you know, to the 20-day EMA. Like, there's a million other strategies that you could try. I don't know enough about the viewer in what scenarios they've tried and or what of them they have exhausted. But again, it comes down to the 30,000 foot. The macro view is it your goal to try to be a master of trading micro E-minis, or is it to make money by being in the markets, right? Because that kind of situation is like, look, instead of buying or putting down the margin for these things, you could have bought one share of NVIDIA and made more money with a buy and hold. So you have to figure out what your goals are. Do you want to do it for the emotional win and being able to say you're a trader, or do you want to make money? So I know it gets deep. And I know I obviously have my strong opinions, but the thing that the main takeaway, whether you agree with me or not, is that I have a lot of self-knowledge. I know who I am. I know what I'm about. I know why I do stuff. Intentions equal results. So what is your story, right? Because you don't have to agree with me. I'm not saying it because I want people to agree with me. But what are you doing it for? For the time and the money and the effort that you put into your craft, what are the results that you want? Because to me, when I look at certain folks, I can kind of see that the fixes are very easy from a tactical standpoint, but they just don't have what it takes to pull it off. It's not a bad thing. It just is what it is. So those folks might be better as intermediate, swing traders or intermediate trend followers, or they might even be better as investors and forget the trading thing altogether and have a good life.
Right.
I can't preach about it, but I can only say, the racket in Valorant. Like there's some folks who are really good IGLs, and there's other folks, because it takes a personality type. You have to be selfless. It's an integral role to the game. But when you look at the end of the game, you don't have a lot of points. You don't have a lot of kills. You don't have a lot of the stats.
Yeah.
But the role is important. You know what I'm saying? So you can look at trading the same way. Do you care how you win, or is it just about the win? And if you are winning, right, and that gives you self-esteem, then what kind of numbers are we talking about? I was always thinking in terms of percentages because the dollars is like, again, working class way of looking at it. I made $100. Well, what does that mean? If I don't know what that means, $100. It might mean something to you. It might be a lot of money to you. 10,000 might be a lot to you. 100,000, million might be a lot to you. It all has to deal with the risk that you're taking. I think a lot is set on risk-adjusted returns, but everyone has to figure out what it is that they want out of the situation, which is really true in life. And so I find that there's folks who kind of come to trading, but their whole approach is wrong. Their approach to the markets is wrong. They don't understand how markets work. They don't understand the people that are involved in the markets. All they see is their Discord and what they should do, and they don't have a full understanding of the bigger picture and the interoperability of all the moving parts. And that's a detriment. That to me is a detriment. I think people should have a better sense of how markets work. And that they should, one fix here is look at the equity curve. What's happening with the person's equity curve. If it's not sloping up, you should probably, stop fishing and cut bait. Again, I don't know enough about the individual and the struggle, but if the person is, say, struggling, are they day trading? Probably after 3, maybe 6 months, you kind of know that strategy isn't working. But then again, if you're day trading, you can go to a simulator and kind of see, like, what strategies have been working. Can you try those on for size? You're trading small enough, one micro contract. I don't think you can get smaller in futures. And then it's like an inner strength. Is it worth it to you to keep trying? Like, I don't know the answer to that. That's really on a person-by-person basis. What is it that you're doing? How are you fulfilled? How are your needs met from all this struggle? They want to write in more, then maybe I could answer the question better. But I don't know enough.
Sure. Yeah, I think one of the things that I think people need to understand in general about, what they do, especially when it's something that is definitely, I'd say trading is fairly mentally taxing for a lot of people, especially how they internalize it with, the instantaneous, the dopamine hits and, all the day trading mindset, that kind of stuff.
Yeah.
I think understanding how, you work and how your brain work is, the utmost priority and importance. With Valorant, we have a role duelist, right? That's the role where you get in there and you have to be just a magician. You have to be super, super fast. You have to get kills for the entry to take the bomb site. You're working like a maniac. And duelists have this tendency to do something what we call overheating, and that's generally an ego issue. They're like, okay, well, I got 1, now I want 2. I got 2, now I want 3. Oh shit, I got 4. Now I want to kill everybody on the other team, and then now I have a cool clip I can post on Twitter. So that's one of the things that we kind of tell our duelists on every team. Not everyone's like this, but a lot of duelists like that, kind of attention that they get from doing stuff like that. So they'll be like, I want to get more. I want to go in. I want the Twitter clips, and that's one of the things that we have to kind of quell is like.
And what happens, like, if they push it and they go too far, is they end up getting vaporized?
Yeah, they get vaporized and you lose the round. Like, the positioning for the rest of your team becomes off because, like, they're either, one, trying to work around the duelist and try to help them, which could put them in a really bad spot. Because the duelists have movement abilities. Like, they can go really, really fast. They can dash ahead. Yeah. They can get out of situations where other characters don't have that. So it's like they'll potentially screw the rest of the team by either putting everyone else in a bad spot or putting them in a 4v5 or, a numbers disadvantage. So, those are some of the things that we kind of focus on. It's like, I think understand – prospect theory is a really good one. You talked about, not letting your winners offset your losers and then you're still down. Yeah. That's kind of a prospect theory thing is like, you're allowing the plus, 2% or whatever to kind of say like, oh, I'm winning. And that's like, what the lizard brain does. That's like how we were, that's just a function of our biology. And sometimes you have to learn to offset that.
Yeah. Again, going back to simulation, you can kind of see like, because of the way the simulators work, you can go and isolate like what were the big trades, and you can kind of go see how did they look on the chart after the fact. So then you can kind of say, okay, here's where I would have been in if I was doing it by hand, but here's what I can see I can now look for to stay out of my own way so that I can let the winning trades just run, without getting in my own way. And that's like, to me, and the reason I harp on this is because it's a universal issue. It's like it happens to the E-mini day traders, but it also happens to the folks that I talk to who are on big trading desks. It's like they don't think big enough, right? And it's the single biggest thing that holds people back is that they don't envision a bigger world. They're small-minded in that regard. And you can't reach some people. Sometimes they're just addicts, and it's like, and the reason I bring it up that way is like, if you're an addict and everyone else around you see that you're addicted to something and that you should get help, the person who's an addict isn't really going to go do it until they're willing to go do it. They have to have the will to stop doing it. And so I can't make anyone make more money. They have to have the will to do it. They have to see that for the work and the time, money, and effort that they're putting into their ethos and their strategy, they're only coming away with 60-cent dollars. They're still making money, but they're only bringing home 60-cent dollars if you look at what they could be doing, if they had a mental shift. So the mental shifting part's the biggest, to me, is the biggest part. It might even be more than 80% because the trading tactical part is not that difficult. It's not beyond fourth grade math for most people. Adding, subtracting, multiplication, and division, like that to me was fourth grade. So the math can be more sophisticated if you need it to be. Yes, you can look at probabilities and Bayes' theorem. Probabilities and odds are kind of the same thing. And then expected values, you can look at, conditional probabilities, Bayes' theorem. But even still, that's ninth grade. Like, you're not talking about needing to get a degree in applied math. You're talking about some stuff that requires maybe a little algebra. But other than that, it's not terribly sophisticated. Then it's not just the will. It's like, do you have the emotional constitution to try something new just for the sake of trying? Don't worry about what the outcome is. Try a new process. See how it feels. Because I can share with you the things that I looked at when I was trading 35 years ago. I don't know that they would work today. It was a different market, different mindset, different commission structure. Everything was very, very different. So whether you like it or not, you're going to have to evolve. Because the markets are going to evolve. We talked about that, or I did. I can't remember, but that was something I said on a show. Because of the nature of markets, they're going to evolve. They're going to change, and you have to adapt, right? And most people aren't on trading desks. They're doing this at home by themselves without resources and without knowledge. And so their way of knowledge and study is like choking down as many YouTube videos as they possibly can. But that's like what Steve Martin said about going to college and studying philosophy. It's like he remembered just enough of everybody else's philosophy to screw his up for the rest of his life. Sooner or later, you have to pick out what's best for you, despite what you think your E-mini day trading hero is doing, because that's not your life. That's his or her life. You know what I mean? Yeah. And sooner or later, you have to make the rules yours. I'm sure if you look at IGLs or duelists, they're very, very different people, but they all have their own unique way of fulfilling those roles, right? In trading, we call that alpha. So that would be an interesting study to see, like, what is the personality type that goes to fulfill those roles, right? Because they seem like they're different people, they're different makeup.
Super different, yeah. And there are like some guys who are like really passive duelists and some that are really aggressive. Like the passive ones are...
The Brazilian guy,
He's aggressive.
what's his name? Kama?
Aspas, yeah. It means comma in Portuguese, but yeah.
Dude, don't start with me, Portuguese. I got it. So Kama boy,
Yeah,
he's a different type of he's a duelist. Then there's other folks, and they're duelists too, but their whole approach is different.
completely, yeah.
Right.
And Aspas is known for having some of the best decision making in the world.
Yeah.
Like he is known for being able to make decisions faster than anybody and make the weirdest decisions that like
We should get him
off.
on the show. That would be psych. That would
Yeah.
be if he would do it, because like we can talk about tactics and emotional intelligence and trusting your instincts, because that's all trading.
Yeah.
You know what I mean? At the end of the day, it's really trading.
Yeah, and he speaks phenomenal English. Like he speaks great English, and he actually is learning Japanese. So like, I mean, he's just a super smart dude.
Yeah. So that would be good. Maybe we'll have some guests on. I think there's too many interview shows, though. That's the problem. And it's like I can't, even the famous ones that everybody knows, and I'm not going to mention the names because I don't need the asshole haters in the world. I just don't have 3 hours to sit down. That's why we even have a diet of the mind on this show. I do 10, 15-minute shows on the 2 days that bookend this show, and then this is a longer form. Everybody knows it. If they don't dig it, they don't have to tune in, you know? But at least on the other side, I have bite-sized approach. It's not going to kill you. And usually, hopefully, there's something meaningful to say, something that they can take and run with. Admittedly, a lot of it is self-study. But that would be interesting to just talk about the mindset, talk about preparation. You know, what kind of research does he do, you know, for the game, right? Because you'll have all these different maps, right? Yeah. Right? So there's different approaches for different maps. And then there's, does he know enough about who they're competing against?
Yeah.
You know what I'm saying?
A lot of the, you know, he's just so good that a lot of the time he's able to just like do it on the fly.
Mm-hmm.
Like that's a very, very rare trait, but he is like really capable of recognizing, you know, the enemy's style of aim, you know, saying like, okay, if I get into a really bad spot, like, am I just going to do some crazy movement and then really confuse them and make them miss and then they're out of ammo and then I shoot them back? Or like, you know, he's next level, dude.
Yeah.
This guy's like,
that's good.
He's crazy.
Yeah.
Yeah.
Well, I mean, look, folks, at the end of the day, love me or hate me, I got to speak what I know is the truth from several decades of experience and what I've witnessed other people do. I've seen people trade all different time frames and all different instruments, and I've celebrated all their success, and I've certainly tried to help everybody who's struggled. Sometimes you really have to shake your shit up to fix things, but you have to be willing to do that. And you know, I go back to the quote from Anais Nin, and then the day came when the pain it took to remain in the ball was greater than the pain it took to flourish. And so you have to figure out what it is that you want to do and how you want to do it, and when are you going to, you know, pivot and try something new and not have irrational fears about things that you haven't really experienced yourself, where you had this Johnny Cochran logic, if it doesn't fit, you must acquit, until you've actually experienced the feelings of different trading styles. To be frank, you don't know shit.
Yeah.
You can't intellectualize it. You have to go through it. It's experiential. It's like talking about sex when you didn't have any. Like you have to go down and get Froggy style and figure it out that way. And then you can speak from experience. But until you've experienced what it's like to take a trade home, right, then you can kind of start to qualify and quantify what that risk really meant to you, right? And even one night isn't enough. So, you know, I can't help people if they don't want to help themselves, basically. And the minute they become very rigid and closed-minded on things, it's like there's nothing I can say intellectually if they're unwilling to feel their feelings. But again, the feelings that you want to feel are oftentimes on the other side of the feelings that you don't want to feel. You just have to try it. So for me, I had a strong appetite for wanting to feel all my feelings because I knew I wanted to change, because I knew I did the blue-collar despair thing really well. And the only way I was going to change is if I actually invited a whole host of new feelings into my world that I had never experienced. I'd never experienced the process of going to raise money, of having my own model, of having my own company. All of it was new. And there was a million places where you could get psyched out and just stop and stall. Be like, I don't know what I'm doing. But that's the thrill of figuring it out, is being in the mess of it all and having to be resourceful and persist, have a good attitude, be determined, and keep moving forward. I mean, when I sit back, if someone said, what's the biggest thing holding people back? And I'd be like, it's themselves.
Yeah.
You know, they don't dream big enough dreams, and they're locked into truths that aren't necessarily really true, but they believe that they're true. And that belief is strong enough to lock people out of actually performing better, because they're locked into performance. Like I said, they're taking home 60-cent dollars.
Yeah.
So maybe it's not a big deal for 1 year, but if you do that for several years, you know, you're leaving a lot of cheddar on the table, right? The opportunity cost is actually quite large, even if you're winning. So at any rate, that's all I have to say about that.
Yeah, no, I think it's a good place to end today's episode. Thank you guys again so much for watching. We really appreciate all the support. Make sure you guys like and subscribe. All comments help the algorithm, and I will see you guys in the next one.
Take care, folks.
Okay, everybody, thanks for being here. Please take a minute, like and subscribe to the show. You could also leave a comment. I don't have all the answers, so it's good to get some feedback. Also, if you would like to support the show, check out the links below. You can get the free audiobook of The Inner Voice of Trading, and also information about the course that I teach with Victor Sperandio. Thanks for being here, folks. I'll see you tomorrow.